All right, let's get into it. Today, we're going to level up your QuickBooks Online skills and tackle some of those really tricky sales tax scenarios. QuickBooks is amazing at automating the easy stuff, but some situations, like special city taxes or those complicated expense rules, well, for those, you got to roll up your sleeves a bit. So let's dive in and make these complex tasks feel simple. So does this question hit home? If you're nodding your head right now, you are definitely in the right place. You probably handle the everyday sales tax just fine, but then, bam, you hit a wall with things like meals and entertainment rules, or maybe some weird municipal tax you've never seen before. The standard settings just don't cover it, and honestly, it can be a huge headache. But here's the really good news. QuickBooks Online has these super powerful custom tools that are built for these exact situations. It's just a matter of knowing where to find them and how to use them. This is how you go from feeling totally frustrated by sales tax to being in complete control. So let's get started. First things first, taming that complex tax. And your command center for everything we're about to do is the Sales Tax Center. Seriously, think of this as your mission control. It's where you'll set up, manage, and check all your custom tax stuff, giving you one spot to know with confidence that everything is set up right. Okay, so the absolute first skill we have to nail down is creating a custom tax rate. This is the foundational building block for everything else. I promise once you get this concept, you can handle pretty much any weird tax scenario that comes your way. Let's walk through it. So you're in the Sales Tax Center, and you're going to click on Manage Sales Tax. And from there, Add Tax. Now, this is the most important part. You have to choose the option to add a custom tax. That's what unlocks this new window where you get to define everything. Give it a name that makes sense, tell it which tax agency it belongs to, set your filing schedule, and of course, plug in the actual rate. You click Add, and boom, your custom rate is officially in the system. Now check out this Pro Advisor tip, because this is a game changer. When you start making a few of these, your list can get messy real quick. By giving them a clear name, like putting a C- in front for custom, or just calling it Toronto Hotel Tax, you make it so much easier for yourself or anyone else to know exactly what that rate is for. It's such a simple habit that will save you so many headaches down the road. Okay, so we've got the how down, but what about the when? When do you actually need to use one of these custom rates? Let's look at two super common real-world examples where this skill is absolutely essential. This slide breaks it down perfectly. On one hand, you've got meals and entertainment. This is a federal rule that says, hey, you can only claim back half of the goods and services tax you pay. Then, on the other hand, you've got something like a municipal accommodation tax, a totally separate tax that's just for one specific city. See? Both need a custom setup, but for completely different reasons. Okay, now this is where things get really, really cool. Sometimes just one custom rate isn't enough. You actually need to bundle multiple tax components together. QuickBooks calls this a group rate, but you know what? I love thinking of it as a recipe. We're going to stick with that meals and entertainment example. To get this right in QuickBooks, we need to follow a recipe for a group rate that has 3 distinct ingredients. Let's break them down one by one. Ingredient number 1. This is the part of the tax you actually get to claim back. So since you can only get half of the 5% GST back as an input tax credit, our first custom rate is for 2.5%. This is the good part, the part that reduces how much tax you owe the government. Ingredient number 2 is the other half. This is the 50% you can't claim back. So what happens to it? Well, it doesn't just disappear, it becomes a regular business expense, just like the meal itself. So we make another custom rate for that other 2.5% and tell QuickBooks to track it as an expense. And for our final ingredient, we just need to add in your provincial sales tax, or PST. This one's usually pretty straightforward. It's just the standard provincial rate that gets added to the mix. And now we put it all together. In the group rate setup, you literally just pick your 3 ingredient rates that you just made, the 2.5% liability, the 2.5% expense, and your PST. Give the whole group a name like meals and entertainment, and there you have it, a single tax rate you can pick from a dropdown that automatically does all that complicated math perfectly in the background. It's awesome. And here's another tip that is absolutely critical. You really, really don't want to skip this step. Once your beautiful group rate is built, go back and make those little ingredient rates inactive. This is so important. It doesn't delete them or break your recipe, but it hides them from your drop-down menus on invoices and bills. This keeps everything clean and stops you or your team from accidentally picking one of the partial rates. All right, so getting set up correctly is half the battle. The other half is keeping things accurate over the long haul, especially after you've already filed a tax return. This means knowing about a couple of key reports and how to make adjustments when you need to. So have you ever filed your taxes and then realized, oh no, I need to change an invoice from last month? Yeah, we've all been there. The tax exception report is your safety net. It automatically hunts down any changes you've made to a closed period that messes with your tax numbers. That way, you know exactly what you need to fix on your next tax return. It's a lifesaver. Bookkeeping isn't always as neat as just filing and paying. Sometimes you make prepayments to the government, which are called installments. And then, well, sometimes you might get hit with interest or a penalty. Both of these situations require you to make a manual adjustment in QuickBooks. So what's the difference? Well, it's pretty simple. An installment is money you've already paid, so when you record it, it decreases the amount of tax you owe for that period. Makes sense, right? But interest or penalties are extra charges the tax agency is adding on, so when you record those, it increases the amount you owe. QuickBooks has specific adjustment tools for both to keep your numbers spot on. So let's just pause for a second and look at everything you've just mastered. You now know how to build custom tax rates right from scratch, how to apply them to real-world scenarios, how to build those powerful group rates for the really tricky stuff, and how to manage adjustments to keep everything accurate for the long run. The big takeaway here is that you are in the driver's seat now. What might have seemed like a confusing, impossible task is now just a clear, manageable process. You have the tools, and now you have the knowledge to handle it all with total confidence. So I'll leave you with this question to think about. After everything we've covered, what's that one complex tax situation you're going to tackle first? Is it finally setting up that meals and entertainment rate? Or maybe it's that pesky local tax you've been avoiding? Whatever it is, you've got this. Thanks for tuning in.